Most traders are doing long-term investing completely backwards. They buy shares, they tie up their entire account, and then they wonder, why is my portfolio barely growing? I'm not seeing those gains. So in this video, I'm gonna flip everything completely upside down, and I'm gonna be showing you how to use leap options, how to use this very powerful leap strategy that I personally have used for a very long time to get the same exposure to the stocks that you're buying, but for a fraction of the cost. You are not ready for how simple this is actually going to be. So I'm very excited for you. So I'm going to be showing you the important math behind leap options and using leverage in a smart way, because that's what leap options are. They allow you to basically buy a call option long-term, get exposure and leverage into the stock as it goes up. This is not guessing. This is not gambling. This is not some complicated option strategy. A leap option is just a long call option. So this is simple. And the only kind of caveat here is we're going to be talking about a specific type of leap option, not just a leap option, but a deep in the money leap option. So this is going to be a deep in the money setup with long expiration that's going to behave very similar to owning shares. That's the goal of this video. And I'm going to be showing you this with a live example. I'm going to pick a stock that I'm looking at right now today that you can execute this strategy on. So the leap strategy is really interesting because it gives you leverage, flexibility, and way better returns on the capital that you're investing. So once you learn the strike selection in the live example I show you, the expiration dates, and the criteria that I use, you're going to understand why I personally almost never even want to buy shares anymore. I don't want to buy shares because leap options are superior. And I'm about to break down the full playbook and show you real examples and walk you through the main math step by step so you can start using this strategy immediately. Here's why leap options are so powerful. When an option is deep in the money with a high delta, it stops acting like a lottery ticket and starts behaving basically like the stock itself. You get nearly the same price movement, but at a massive discount because a deep in the money leap option might only cost you 30% of the shares. And because you're buying so much time, the decay is actually very small. The beauty of leaps is you have some instrument, you have some asset that moves just like a stock, low decay and high capital efficiency. There's literally nothing else that you can even hope for. It's just high amounts of returns for low amounts of money. This is the best of both worlds. Of course, it is a double-edged sword. So if the market moves very favorably, you're going to be making all sorts and all kinds of money, like literally all sorts. You're going to need a wheelbarrow. You're going to have a wheelbarrow of cash. If it goes down, we will talk about that in the live example. I'm going to show you how to manage the strategy also. But again, just understand the contract moves almost dollar for dollar due to delta. Because delta is high, delta explains how an option behaves. 80 delta, the option is going to be behaving very much in tandem with the stock. The stock moves up the dollar, option is going to move up 80 cents. So you get stock-like behavior without paying the full stock price. High delta also gives you stability and predictability in the movement. So in the example I'm about to show you from today's live plays that I'm looking at, you will see and you'll understand how I capture the best strike price, how I kind of lock in and find a setup and the price that I'm willing to pay. As well, we'll show you some of the returns that you can make, the expected return, because of course, I can't predict the future. I don't know what's going to happen, but I'm going to show you the expected return if, say, the stock moves up $5. And the plays that I'm going to be looking at are very interesting because I've done quite a bit of research today. I think you're really going to enjoy the plays that I have because they're going to save you a lot of money. And you probably already have some of these stocks if you've been following my channel. I personally love deep in the money leaps for one simple reason: long-term upside with smart leverage. A deep in the money option has high delta, meaning that it's going to mirror the stock. So it's going to save you a lot of money. Use leaps to grow your portfolio and make bets on bullish stocks. Why not benefit with lower upfront capital requirements? Like, look, because leaps have built-in leverage in a 1 year, your risk management is way better off. Your ROI is also greater per dollar invested. And a deep in the money leap might only cost 70 to 85% less than buying 100 shares. So this strategy is good to use on Nvidia, on Tesla, on Meta, on SoFi, on Palantir, and all the other stocks that I have in my portfolio. I have a lot of these stocks. Leaps are good on all of them, especially if you want to make your capital more efficient. Most people can't scale because they simply just can't pay attention enough to learn a powerful strategy. I'm going to be revealing the game-changing info for you. So try this. Next time that you buy 100 shares of stock, instead just buy one call option with at least 70 delta that is 1 year to expiry. If your goal is to make money, if a stock rises, just replace it with a deep in the money call option. And that call option will basically give you the same benefit as a stock, but now you can have more positions in your portfolio, more diversifying. And diversification is obviously super important. I remember when I first was scaling my portfolio massively, and I first learned about leaps and how to actually use them and how to take advantage of them, it completely changed my game. I was dumping so much money into random stocks, trying to, ride momentum. One of them was Tesla, okay, which I made it big on Tesla. But just because I was right on Tesla didn't make my portfolio go from $100,000 to $700,000 in 2021. What actually did was me dumping just $5,000 into Tesla and that position becoming $20,000 in a matter of weeks. When I had seen those results, I was like, why? Why was I buying stock? A stock can't turn 5K into, a lot more multiples. It's not going to happen. And it's definitely not going to happen in a matter of weeks. So the type of return that I saw from a leap option was only because of leverage. In 2021, I used leverage to get a return that took my portfolio literally from 100 to 700. And without leaps, I would not be able to do that. Without buying options, I would not be able to do that. There is a place and time to buy options and to do it profitably. I'm going to be showing you an example, obviously, but I just wanted to point out, but this story is something that is replicatable by even a beginner. It's just a matter of picking the right stock and entering into the right position. This was back in 2021. And when I saw what I finally gained, made me really realize that wealth is a lot closer than we think. It's not overnight. It's not, in just in 1 week or 1 month. Obviously, you can't dump, 5K. I turned my leap option on Tesla went from 5,000 to it was like $19,700 or $800. I don't remember because it was back in 2021, but it was this crazy massive return between 19 to 20K. And obviously, I did not dump my entire portfolio there. Right? Had I dumped, I just wouldn't have the balls. I just literally my balls are not big enough to put in 50K at a time. I wouldn't be able to. And that's because that wouldn't be proper risk management, position sizing. And at that time, I was still learning, to me, how risky I could be. How much was I willing to invest? For me, 5K was still a pretty big investment, but it ended up paying off huge. So if you want to grow your wealth quicker and be part of a bull market, which we're in a bull market, baby. We're in a very good market. I know sometimes the market goes down and we all feel down because it goes down a couple percentage points, but we're on one huge bull market since 2008. The market just continues to go up with some pullbacks. That's fine. Pullbacks are healthy. So we're not here hoping that the market's going to do good. It's basically the rule. The market just does good. So because the market just does good, buy leap options on high quality stocks and position yourself for massive gains by choosing the right stocks, the right leap option, the right expiration date, the right strike. Yeah, I know it made it sound all easy, but I'm going to show you some examples that you can probably print money from. Not for sure, right? Because in the market, you never know. If the market pulls back, you can lose some money. But if you have several leap options and we continue to be in a bullish market where the stocks that I'm going to show you, I believe are going to keep going up. It's like steroids for your portfolio. It's like getting massive gains while putting up very little amounts of capital and taking on less dollar risk and literally diversifying yourself better. So you're taking on smart risk. And this is basically how you scale your portfolio. So let's not waste any more time. Now you understand everything. Let's go into my live examples. All right, guys, we're going to go over some examples, but real quick, the first example I'm going to be showing you is Meta. And you can see on my screen right now that on November 17th, I ended up recommending the 600 leap call option on Meta for September 2026. This was a deep in the money leap. It was actually not super deep in the money, but that was actually a huge benefit because it was very low cost. And this trade that I recommended in the Options Retirement Academy ended up making so much money in profits. And I am super happy that this was a recommendation that I made for the members, and they have already seen a massive return from this specific position. We also opened up some other positions here. I open up trades regularly on Mondays, and that's the main thing that I'm doing in my coaching sessions is I'm putting out trades. If you're interested in getting trades and seeing what I'm trading, as well as leap plays, covered calls, selling puts, and much more, I am trading every Monday. You can look at that. The first link in the description. We also have another coach here that's putting out trades as well. So that's something that you should look into.
All right, guys, let's jump into the portfolio. It's currently sitting at $103,000, which is pretty good actually, considering the market's been volatile. I'm up in the 100K portfolio here, so things are going really well. Now, the first trade that I want to show you is going to be Meta. Meta has run up, and again, I ended up purchasing the Meta Leap option, recommending that to the community on the 17th of November. So it was trading for around $600 per share. And obviously with Meta being at, 672 right now, that is about a $65 increase. And that has literally been, I don't even know, like just the most massive return ever. Like literally crazy return. Crazy. Like I don't even know what else to say. I just want to show you this trade one more time. I still think there's more money to be made. Okay, I still think there's more money to be made. And again, the whole point of a leap option is that the cost is just way lower. Like if we look at the side-by-side cost, buying Meta, right, 100 shares, when I recommended it was $60,000. Now it's still $67,000. It's a very high amount. Now if I go for the September 2026 expiry date, right, and I show you what the 600 call is, it's $139. I mean, when I purchased it, it was in the $60 premium range. So that's literally $6,000. Now it's trading for, well, it's going to be around $139. So it's going to trade for more right now, and that's because the stock went up and this option became a lot more valuable. But again, the side-by-side comparison of cost is buying 100 shares is going to cost you, 67 grand. Okay, not everyone has that just laying around, right? And the leap option here is going for $13,900. So massive reduction in cost. And if we look at the delta, okay, the delta of this is 0.72. So very high delta. And that just means that if Meta does the same thing, right? Like what I said, it went up, $70 from when I recommended it, essentially went up 70, a little bit less, $60. If it were to do that again, right, what would happen? Well, if Meta went up $60 again, it would be 730. I mean, that could happen again in 30 days. I mean, anything is possible with the bullish stock like Meta in a bull run. Okay, I know the market's been choppy, but Meta has been very predictable after the crash that it had. That to me was very obvious that it would recover. That's why I put out that trade in the Option Retirement Academy private Discord, because I was very confident. I was extremely confident that we're going to see good results. When I'm looking at buying a leap option, I'm still looking at the 600. The delta is right in the range that I like. Volume is a little low. It's not too low, but it's a little low. Open interest is very good though. It's over 1,000. That's great. So here, if you end up buying this, it's going to cost you $13,900, and essentially your break even is going to be in the 730 range. However, you do not, I'm going to repeat this, you do not need to hold until expiration. You really don't. You don't have to hold a leap until expiry. In fact, usually I take profit and I cut the position when I'm reaching the halfway mark. So when I'm 6 months into a 1-year option, I'm looking at taking profit, because in the last 3 months is when time decay and theta really starts to eat into the option. So I don't want the decay to really kick in. Right now, this $600 strike, it's $72 in the money. So $72 of this premium is intrinsic value, where the option's already in the money, right, by $72. The rest of the value, which is literally another like almost $70, it's like 68 or 69, just doing the math on the spot. Basically, the other 50% of the option's value is time value, okay? You're going to lose that time value if the stock stays the same and it doesn't move anywhere. So if it doesn't move anywhere and expiry comes September 18, 2026, the rest of the half of this option is going to leave. It's going to decay, right? So you really want to cut the position before the last 3 months, because the last 3 months is where the time decay really happens. So right now we have really good intrinsic value, and we don't want the extrinsic value, which is the time value, to start to kick in and really decay this option, because right now we're deep in the money. And deep in the money matters because we have a lot of control of the stock, right? So we have a 72 delta, which means effectively this leap option is giving us 72 effective shares. That's how you should think about it. You should think of it as replacing stock, and this leap option functions as a replacement of stock. So how much are we replacing? Well, we're replacing 72 shares. How much are we paying? Well, we're paying a small fraction of what we would pay for Meta. Okay, so on this trade, you don't really need to look at the break even because you're not going to be holding this option until expiration. What my goal and my plan is, and I've already made so much money, I'm already telling my members like, hey, we can even take profit at this point. So if you haven't made this trade, you missed out. You really missed out on this trade. This was a return that has, in and of itself, just this one trade, paid multiple times for the community. But that's besides the point. I still think that Meta can gain more value. And my plan is that when Meta hits 700 to 750 in that range, right? I don't know when that's going to happen. I don't know how soon it's going to happen, but that's my goal. And when that happens in say, January, February, I'm going to reevaluate this option and see if I want to take profit and close out this option. So this break even right here that we're looking at really doesn't matter a whole lot because as we go up, this is just the end chart. This is at expiration at the end, right? So Meta will move up by $10, which is like nothing, right? That's literally 1%, okay? But the option will move up by $7, and $7 is pretty high because you're only paying 139. So 7 is pretty much that's like a 5% return. So if Meta were to move up by like 1% here, roughly, give or take, right? I'm just doing ballpark math. Then the sleep option is going to move up by about 5%. So you can see how lucrative this really is, that if Meta were to go up, that this premium is going to rise very significantly, very quickly. All right, now I want to show you kind of how the math is going to work out. These are a couple old examples. I'm just going to do a new example right now for Meta as of we're like almost in mid-December on December 6th. All right, so this is some of the old math that I did. I just want to show you some really, really simple math and break things down, okay? This option right here, that's 600 strike price, $139. Literally, here's what's going to happen, okay? We have a 600 strike price, right? I'm going to write here strike. Let me zoom in here a little bit. We're going to zoom in like that. So that's our strike price, right? And we're getting paid 100, or we have to pay actually, since we're buying option, $139, okay? So that is the premium, okay? Now, take a look at it, 72 delta, okay? So if the stock goes up by $10, okay, all you have to do is take 10 multiplied by the delta of, it's 0.72, okay? So this is our gain for $10, right? So this is our gain. I'll just write gain here, not to confuse anyone. So this is our gain, right? So check it out. This is really, really cool because this is our option, right? And let's just compare it to the stock. So Meta's at 672, right? 672. And if it goes up $10, well, that goes to 682. Well, this is such a small gain, right, on the stock. Okay, this is a 1.4% gain. Not that much, right? Guess how much this is right here. Again, I'm doing the math for you. Just so you understand. So I'm going to make this a percentage. And I really just need to subtract this by 1 so you can understand. So it's 1.49%. So this is old price. This is new price of Meta, right? This is the stock going up by $10, right? And this is the gain percent. So that's how much you gain as a percent. Now let's see how much of an advantage it is to be in a leap option. How much money do you actually make with a leap option? How much better is it? We'll check it out. So we're going to take this $7.2 of gain divided by the premium. And then, yeah, basically exactly as I said, it's about 5%. So this is our gain percent now, right? This is the gain percent. This is our dollar gain. Okay, this is our gain percent. So how much better is it? Well, here, the leverage we're getting, okay, is going to be 348%. So it's 348% better in terms of upside. Now, keep in mind, if the option pulls down, then of course you are going to lose money because a leap option is a bullish strategy. So when the market falls down, you're going to lose money. But of course, you lose money on basically almost all strategies when the stock market pulls down, unless you're buying put options, you're betting on the stock market pulling down. I mean, it's just a given that if it pulls down, you will lose some money. So I just want to point that out, that there is leverage here, but it's pretty smart leverage. I'm going to call it smart leverage, where you're paying a small fraction of the price to own essentially the same amount of shares, or you're replacing shares with leap options. And the delta is really going to help explain how much of those shares you are replacing. That's where we got the 7.2 from, is that when the stock moves up $10, your leap option moves up by $10, but multiplied by the delta. So effectively, it's a $7.20 gain versus here, which is a $10 gain. And that's why this strategy is called a stock replacement strategy. This is one of the best strategies that I'm teaching in the Retirement Academy because it's a great way to scale, okay? As you get a bigger portfolio, you want to lean more into the wheel strategy. You want to lean more into selling puts, covered calls, selling options. But to grow your wealth, to grow your portfolio, or just to have a higher risk, higher return strategy that I wouldn't even call high risk, it's just higher risk than the wheel, but I'll call it medium risk strategy, high return, is going to be using LEAP options. And that's why I'm always researching good stocks to buy and use LEAP options, because LEAP options is one of the best things that you can use to really leverage, smart leverage. So again, here, this is the total impact that you're getting in the math breakdown of buying a call option, a LEAP option, that's long-term in 1 year, on Meta versus the stock itself. And by the way, this is just like a $10 gain. If I were to switch this and let's say that we're going to do like a $50 gain, right? Which is kind of, that's my end goal anyways. So I don't know why I showed you 10. Well, I showed you 10 to give you the foundation, but let's actually do 50. Okay, so this is my exit point. This is my goal basically. If I can get a $50 gain, right, in the stock, so we're going to do 50. So we're just going to do this number plus 50, right? So if Meta goes up 7%, and we already know, like there's sometimes in the stock market, 7% moves in a week, right? But I'm saying in the next 3 months, right? So I'm being very conservative. If Meta has the momentum and it goes up 7%, right? This is the effective gain that we're going to see on the option, right? This is not exact because obviously there's some theta. There's going to be a small amount of theta. It's not really big, but there's also gamma. Okay, let me explain to you real quick. I'm not going to go into deep details here because this is a beginner tutorial, and you don't need to know the huge deep details to be a successful trader. Okay, so if I'm scaring you or this looks hard, don't worry. You don't need to know everything here. I just want to explain real briefly. As an option goes up and it becomes more deep in the money, the delta goes up. Okay, we know that's true. We can see that even here. If we go up to 660 here, the delta is going to be less, right? Because it's further out of the money. It's not here, right? But if it was more deep in the money, right? So if there was an option that was at 550 and it's become deeper now, you can see it's worth more because it's a deeper in the money. There's a higher chance that it's going to expire and stay in the money, okay? So the more the stock goes up, the higher the delta will become, okay? So as the stock goes higher, this strike price that stays the same is going to be worth more because it's deeper in the money. Okay, that change in delta is measured by gamma. And gamma is very, very small. You can see it's super tiny, and that's why it doesn't really matter that much. So theta is really small, and gamma is really small. So these are fairly negligible, especially when there's not a huge move. But when there's a $50 move, well, it's going to be a little bit higher on the delta. The delta is going to change, and let's say that the delta is going to be, something a little higher, not that much higher. Maybe it's going to be 76, okay? So you can see here that the gain is actually going to increase even further, but we also have to take into account theta. The option is going to decay a little bit, and let's just see how much it would decay. It's basically decaying about $1 and, no, excuse me, this is actually $17 a day. So in like 3 months, it's probably going to lose, $17 times 10 is like 170. So in a month, it's losing about $500. So in 3 months, it's going to lose maybe $1,500. Okay, $1,500 from this total premium. We're obviously at $13,900. So if nothing at all happens, then this option is going to be worth, say, $12,400. So $12,400. Okay, so it's going to lose about $1,500 worth of premium. So if we were to take off 15 here, then the gain would be not 38, but it's going to be 20. Hold on a second. So 38 minus 15, yeah, 23. Okay, so it's going to be 23. So yes, time decay might actually kick in a lot. However, if the option goes up, the time decay could change. And if the option were to go up, the volatility will change. So to be honest, I don't think that it would be impacted by as much as 23. So let's just call it 27, right? Obviously, it's a really big factor is time. That's why I say do not hold the option until full expiration because yes, it's gonna kick in a lot more than just $1,500. It's gonna kick in like well over $6,000, right? Well over half the option's value. So this is the gain for this gain. So this is basically my exit plan, right? My exit plan isn't exactly. I want to get this gain as fast as possible. I'm telling you, this is after 3 months. Of course, if we go back, just go back here to 38. If in 1 month, right, I said it's $500 a month, that basically this option is going down. So that's 38 minus 5. This is my exit point. This is my ideal exit point. This is where I want to kind of have a gain. So this is my exit strategy here for this leap option, is within 1 month, I would like to see a gain on Meta. Obviously, this is not always going to be possible. It's very situational based. That's why getting experience under your belt is important. Having a coach in your corner just to show you and tell you kind of what trades to make and how that looks like and how to manage each trade is very important, because this is very situational. But this is basically my goal here. So yeah, if you want coaching, click the first link in the description. But let's get on with this video and talk more about some common mistakes that you can potentially be making.
You already know that you need to learn leaps. So once you understand why Deep in the Money framework that I'm teaching you is so powerful, then you're probably just going to be able to replace your shares in a very smart way. So you're probably not going to be buying lots of 100 shares going forward. And that's cool, but don't get too caught up in this strategy, because you still need proper position sizing. Some of the worst mistakes I see is students only using leap options in their portfolio. Nope, you still want to have other strategies. Maybe it's the wheel strategy, it's selling puts, covered calls. All that's really good. All those videos I have in my playlist or in my free course that I have here on YouTube. But still, leaps, very strong. But if you're a beginner, you have a small portfolio, you can go 50% in leaps, right? But as you scale and as you have a bigger portfolio, it should only be about like 20% or so of your portfolio. Other mistakes that I see, like core steps that people kind of get wrong, is really just picking the wrong stock. If you pick the wrong stock, it doesn't matter. All my wheel strategy, all my leaps videos, all the content that I'm making for you is useless. If you don't pick the right stock, it's game over, right? Which is why, thankfully, I gave you some examples in this video, right? Also, wrong delta. So some people buy a leap option at like a 10 delta. Dude, if you bought it at a 10 delta, you'll understand, right? There's a 10% chance of that option expiring in the money, right? Yeah, it's cheap, but it's cheap for a reason. It's like some old pizza for a discount. Like, you don't want to eat that. You're going to get sick. So picking the wrong delta, no good. Wrong expiration. So sometimes people get confused. They're like, oh, this leap's deep in the money. I'm going to buy it and it expires in 2 weeks. I'm like, it expires in 2 weeks. That's not what a leap is. So just really follow the rules that I kind of gave you in this video. Very, very important. And I always tell people that leaps are a great way to replace stocks. The whole playbook is buy a high delta leap. And this is what I call delta deception breaker. Just break all the rules, have a high delta, get exposure. That's it. Because once you see how the strategy works, you're never going to really look at buying shares again, especially if you're in the scaling stages of your portfolio, which you probably are. Because if you're watching this video right now, you're probably a beginner. You're learning a lot from me. I've been at this for over a decade. I've taught this stuff to over 2,000 people. A lot of the other YouTube coaches on the platform have been through my program. I've had some students. Ryan has been through my program. Ashley's been through my program. I have students that have been through my program that now teach on YouTube. So I'm telling you, I've been doing this for a very long time. If you really want to understand how to scale your portfolio, and if you're a beginner, that's where you are right now, use leaps, but use them in a smart way. Don't have more than 50% of your portfolio in leaps if you have a small portfolio. If you have a medium portfolio, don't have more than 30% of your money in leaps. If you have a bigger portfolio, you're at 6 figures, then do 20% or even less. And if you have a 6-figure portfolio, what are you doing? You should be booking a call and learning more about my coaching program so I can show you how to scale to multiple 6 figures and 7 figures and give you a massive shortcut and help you and kind of guide you through this journey. Imagine 90 days from now, you're positioned in the right stocks with the leap strategy, where that leap strategy gives you massive returns, helps your capital very efficiently scales your portfolio to a level where you can take some of that money and start putting it in other strategies, such as the wheel strategy that I teach about, and then having your portfolio generate enough money for you to not need to work. The leap strategy is a really core component of growing your wealth. So if you want to grow your wealth faster, then click the first link in the description. I'd be more than happy to help you. Hope that you enjoyed this video, and I'll catch you in the next one.